Hello everyone, I'm JKR and I'm here to broadcast the overnight US stocks. As NVIDIA Corporation's quarterly report exceeded expectations, optimism pushed the stock price soaring 16.4%. The market capitalization hit a one-day value-added record of $277 billion, making it the third largest U.S. stock market capitalization. The company is headquartered in California, where demand for AI chips is soaring, and this quarter's revenue is estimated to grow by 233%. Global AI tech stocks pushed the S&P 500, Dow Jones Europe 600 and Nikkei to record highs. NVIDIA traded $65 billion today, accounting for almost one-fifth of total S&P 500 turnover. The company surpassed Meta Platforms' single-day value-added record of $196 billion set on February 2. Market capitalization increased by $277 billion, has surpassed the Coca-Cola Company, among the U.S. stock market value of the third largest companies. Microsoft and Apple are the top two U.S. stock market capitalizations at $3.06 trillion and $2.85 trillion, respectively. NVIDIA took the lead on Wall Street as the company's demand for upgraded AI products surged beyond market forecasts. Other AI concept stocks also benefited, with shares of Supermicro up 11%, Broadcom up 6.3% and US Supermicro up more than 240% this year. The Philadelphia Semiconductor Index jumped 4.97% to a new all-time high. Overall, NVIDIA's success shows that investment enthusiasm in AI continues and the company is expected to gain more market share in this fast-growing sector in the future. We turn our attention to Asia. On Friday, global equities hit record highs on the back of U.S. stocks, which were boosted by solid manufacturing, real estate and labor market data, although Asian markets followed the rally, with China's economic slowdown causing concern. The Fed's confidence in deflation strengthened, and markets were optimistic about its tougher rhetoric. Rising tech stocks pushed Nasdaq 100 and S&P 500 valuations to record highs. Index P/E ratios can be misleading as 40% of companies consider other metrics and stocks may be re-rated. In commodities, Asian oil prices stabilized as investors weighed market tightness and demand concerns. Gold prices fluctuated following the release of U.S. economic data and Federal Reserve minutes, with policymakers willing to keep interest rates low for longer. Global markets were generally upbeat, but the impact of the economic slowdown and inflation needs to be watched. Baidu and NetEase are set to report earnings as China tightens its grip on tech companies, sparking fears of further restrictions on private companies. Beijing is under pressure to restore confidence after the stock market crash, and while steering the tech sector could lead to a shift in resources, China's stock market is not conducive to attracting investors. Baidu, with its low valuation, needs to convince investors that artificial intelligence development can lead to higher revenues. NetEase is expected to deliver strong results, although government regulation could be a drag in the coming years. Chinese tech companies face uncertainty in the current policy environment and could be subject to more restrictions. Companies like Baidu and NetEase need to stabilize investor confidence with their performance. While some banks and companies may announce strong earnings, overall market pressures and regulatory risks could weigh on investor sentiment. Private companies need to pay close attention to policy changes in this context and look for strategies to adapt and respond. There is a growing number of investors in India who want to participate in the Indian market. Overseas investors are showing strong interest in Indian assets that will soon be included in global bond indices. While there is no direct access to the Indian government debt market, foreign funds are increasing their exposure through instruments such as supranational bonds and swaps. Global investor participation has increased, especially outside of index tracking managers. Indian bonds have attracted attention following the inclusion of Indian sovereign bonds by J.P. Morgan Chase & Company. 2023 saw a 5-year high in the number and value of bonds issued by sovereign, supranational and institutional entities. Western asset managers such as William Blair Investments and M&G Investments are venturing into cross-border bonds, with exposure to local Indian debt through AAA-rated notes issued by multilateral institutions such as the World Bank, without the need for an onshore operating license. Global funds have already started increasing their holdings of index-eligible bonds by over $8 billion, and the inclusion is expected to attract inflows of up to $40 billion. Indian bonds have become the second best performing emerging market bonds in 2024. Investors are also utilizing derivatives such as total return swaps to get returns on local debt without having to comply with local investment regulations. Indian assets have attracted the attention of overseas investors in the backdrop of impending inclusion in global bond indices. Through cross-border bonds and derivatives, they seek higher returns in the Indian market. This trend is likely to bring significant inflows into India, but investors need to closely monitor market changes and risks to develop appropriate investment strategies. Finally, let's take a look at what senior Fed officials are saying about rate cuts. 3 senior Fed officials emphasized that while rate cuts are expected this year, they will not be made too soon. Vice Chair Philip Jefferson and Governor Lisa Cook said they were optimistic about cooling inflation, but wanted more evidence that inflation had returned to the 2% target before cutting rates again. While Cook expressed increased confidence in the continuation of deflation at the event, they made it clear that a change in the policy rate would need to be backed up by more evidence. Jefferson agreed that rates could be cut this year, but warned against excessive easing to ease price pressures. On Thursday, Governor Christopher Waller said January's rise in consumer prices requires a cautious decision on when to start cutting rates, emphasizing patience. Waller said the strong momentum in the economy and the rise in inflation data means thoughtful decisions are needed. These views are in line with the stance of other officials, including Chairman Jerome Powell, that interest rates may be at their peak but there is no rush to cut rates. Market expectations for an early and quick rate cut were tempered after the data release, shifting expectations for the first cut to June or July. Senior Fed officials emphasized the prospect of a rate cut, but all called for caution and patience. They emphasized the need for more evidence to support inflation back to target levels before considering a rate cut. This suggests that the Fed is cautiously optimistic about the current economic and inflationary situation, and is not in a hurry to take excessively loose policy. Investors should pay close attention to future data and official statements for more clues on the direction of monetary policy. Today's content broadcast is over. Thank you for watching. We will see you in the next installment. Bye.